The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to Trading Nadex Knockouts and Binary Options. My name is Todd Rich. I am Head of Education over at Nadex. I'm actually going to go ahead and share my camera for a bit this morning. Eventually, I'll probably flip that off because I think it might become distracting. But let's go ahead and get into it. One, I want to welcome everyone for joining today. Thank you for joining us. If you have been participating in our demo trading challenge, I hope you've been enjoying that. If you're not aware of what I'm talking about, we've been running a demo trading challenge this week and for cash prizes. If you missed it this time, stay apprised of what we got going on at Nadex because we're going to be doing those a little bit more frequently. So kind of fun little things. Before I start with today's sessions, I am going to do a little housekeeping item, as all of our webinars are sponsored by our compliance department. And I do need to let you know that trading does indeed involve risk, and that any trading decisions you make are solely your own responsibility, and that this is an educational session. Right? I don't want you to construe anything I say today as a buy or sell recommendation. This is for your education purposes only. So please take it as such. Now, what are we going to cover today? Oh, wait, before I jump into it, I do want to point out that we are here to help. Nadex is here to help you. If you've got any questions about your account or about our products or our markets or anything at all about Nadex, please email us, customerservice@nadex.com. I would also highly recommend that you follow us on social media, and I will emphasize the YouTube. If you're not subscribe to our YouTube channel, go to our YouTube channel and take a peek around. We put a lot of content out there. We put content out there every day. In fact, I'm going to tease out that every morning, 9 a.m. Eastern, 8 a.m. Central, we do a quick little Nadex morning analysis live stream where we take a quick peek at what was occurring in the markets overnight and where there might be potential hotspots for you to consider looking at for the day before the equity cash markets open. And we jump around and we do a little bit of analysis on just a couple of hotspots, something you might not have been paying attention to. And then we even do some show and tell on the Nadex platform so that you can see how people use the platform, how people analyze the markets, and it can help you along your trading journey. So if you're not subscribed to our YouTube channel, check it out. We've got a lot of recordings up there. We push new content every single day. And as I mentioned, 9 a.m. Eastern, we go live every day. Well, we won't be live next Thursday, but we go live every weekday where the markets are open and give you a little quick rundown. I mentioned that Nadex is here to help you. I want to emphasize that this is an interactive session. You can put questions in the question box. Please put questions in the question box. In fact, I've got my colleague Sophie in the background. You can ask her anything. She is a Nadex expert. As I'm going, if I go through something too quickly or you need a little clarity, please, in fact, type a message in there on occasion just to keep Sophie awake and keep her engaged, but she is back there. So we want to make this as useful and helpful to you while we've got you here. And I will take a peek back at some point and look at the questions and make sure that I covered everything because the odds are if you had a question, there's a high likelihood someone else has got the same question. All right, so what are we going to do today? We are going to discuss knockouts and binary options. Now, I am going to go through a little slide deck. If you would like a copy of this slide deck, let Sophie know or email customerservice@nadex.com. We can get you a copy of this slide deck. All you have to do is ask, and we will get that to you. And you can then go back and review this session with the deck in front of you. Now, half of the session or a little less than half the session is going to be on the deck. And then we are going to jump over to the Nadex platform. And we are going to look at some of the charting tools. And we are going to do a little show and tell. Because I find that it's often easier for people to see it than for me just to talk about it. All right, so Just keep that in mind, and we will go through some examples. Again, no buy, sell, or hold recommendations, but a way for you to really understand our products and how to get into our markets. All right, with that, let's jump into it. And I happen to like doing it in this order, by the way. I happen to like doing knockouts first. I'll even mention call spreads. I'll show you on the platform what I'm talking about when I get to call spreads. And then we'll do binary options because I think it's a little bit more intuitive. I think it's easier to understand knockouts first and then understand how that translates to our call spread. And our most popular product, I'm going to finish with a bang, which is with our binary options, things that you're probably already familiar with how they work, you just might not know it. So first, what is a Nadex knockout? And a Nadex knockout, it's a contract, all right? It's a contract that trades within a set price range, okay? Now, oops, there we go. I got to do this. Now, that price range, there are two levels in that price range. So a knockout has two price levels, and the top one, the higher price, is called the ceiling, and the lower price is called the floor. All right, so pretty straightforward. You've got a range. You've got the ranges between the floor price and the ceiling price. And what'll happen, I got to move this out of my way. What'll happen is the contract itself will trade between the floor and the ceiling. And this is what we call a delta one product. Now, what does delta one mean? It means the price of the Nadex knockout will track the value of the underlying market. So if our underlying market, for instance, if you're into indices, is the Tech 100, which is the NASDAQ 100, it will move, our Nadex knockout will move right in line with the NASDAQ 100 index, I think it's the NASDAQ 100 index. So if you like the Tech 100, it will move. It's a delta one. As the NASDAQ future goes up, the Nadex knockout will move up, and it will track right in line with the underlying index. So it's very intuitive for you to understand. There's no extrapolation needed. You are trading the price of the underlying contract, and it will trade between these two levels, the floor and the ceiling. And it's the same as any underlying market. If you think that the market is going up, you buy an 8x knockout. And interestingly enough, if you think the market is going down, you can sell an 8x knockout. Now, some people have a problem or a challenge going, how can I sell something that I don't own? You're simply taking a short position. You're speculating that the price of this contract is going to go lower. And if it does, you can either buy it back at a lower price or get knocked out. And I'll get through that in a second. But it really is, it's speculation. Do you think the price of something is going up? You buy. If you think the price of it is going to go down, you sell. And it trades between a range. Now, a knockout can expire in one of two ways or settle in one of two ways. And the two ways are price or time. And let's talk about that. So we have the Nadex indicative index for each market. And if the floor or the ceiling for that contract is touched, it will immediately settle the contract. All right, the contract will settle, and that'll be that. So if you buy a knockout, all right, you think the price of something is going higher, you have a floor and a ceiling. If it goes higher and you are indeed correct, and it hits the ceiling price, you would get knocked out of the contract. It would immediately expire and settle, and you would get knocked out for maximum potential profit. Now, if you bought it and it went lower and it touched the floor, you would also get knocked out of the contract. All right, it would settle again, but this time because you bought it and it touched the floor, you would get knocked out for maximum potential loss. Now, as I mentioned, you can also go short. So if you sold an 8x knockout, and it went up, it went the wrong way, oops, I was wrong, and it touched the ceiling, you would get knocked out for maximum potential loss. You sold it, it went up, and you were wrong, but you know that your losses were limited. You couldn't lose anymore. Once it touched the ceiling, you're out. And if it went down and you were correct and it touched the floor, you would get knocked out. That's why we call them knockouts. And there, if you sold one and it touched the floor, you would get knocked out for maximum potential profit. So these are Delta One products. They trade right in line with the underlying future, or in the FX world with spot. And you've got this floor and the ceiling, and if it touches either the floor or the ceiling, you get knocked out of your trade. Essentially, what you've got are defined targets. You've got your profit goal, where you would then take maximum potential profit if it touched it, but you also have a stop loss so that if you're wrong, at some point your losses are limited. So it's a defined risk, defined reward. You know exactly what you could potentially make or what you could potentially lose before you get into the trade. And if it touches one of those boundaries, you get knocked out for either a profit or for a loss. Now that immediately begets the question, what happens if it doesn't touch either the floor or the ceiling? Now, if you trade a knockout and it goes, and our knockouts are all 1 week long, and so you could trade them throughout the week. And if that contract settles during the week, we'll immediately list another contract. So there'll always be 4 knockouts for all of our underlyings. But let's say you trade one and it never touches either. The contract at the end of the week will indeed settle. And it'll settle at a price, and then your profit or loss would be the difference between where you bought or sold and where it settled. So if you bought it and it went up higher but never knocked out at the upper level, at the ceiling, you would have some type of partial profit. And if you bought it and it went down but never hit the floor, you would have some type of partial loss. And if you sold it, it would be the opposite. If you sold it and it went up but never touches the ceiling, you'd have a partial loss. And if it went down but never touches the floor because you sold it, you'd have some type of partial profit. So you either touch the floor or the ceiling and you're knocked out, or it'll settle at the end of the week and you'll have a partial profit or partial loss. Okay, now that's knockouts. I want to go a little bit into binary options now. And then after that, I'm going to flip off the camera. And, well, that sounds really bad. I'm going to turn off the camera. Sounds a little bit better. Apologize for that. And because I find it's distracting, and we'll jump over to the platform. Okay, binary options. Now, what's a binary option and how is it different than a Nadex knockout? So a binary option is a short-term defined risk, defined reward contract. So just like your knockouts, all right, and although knockouts go for a week, and knockouts are defined risk, defined reward, binary options are also defined risk, defined reward. And a knockout is made up of a statement or a prediction, okay? And a binary option's got this prediction's made up of 3 components. Right, you got 3 components to this. One is an underlying market. So we've got a variety at Nadex. We've got a variety of underlying markets for you to choose from. We've got indices markets. We've got commodities markets. We've got foreign exchange markets, and we even have event contracts. In fact, we had an event contract that settled today on jobless claims. But it's got an underlying market, and then it has a condition. All right, and that condition can sometimes also be called a strike price or a level. All right, and that condition or that level is usually set up as a true or false question. And then there's an expiration time. And so when I say short-term contracts, unlike a knockout, which is initially set up as a week-long contract, and then if one knocks out, we add a new one, binary options, we've got binary options as short as 5 minutes. We've got 20-minute binary options. We've got 2-hour binary options. We've got daily, and we've got weekly. So with binary options, you've got this large choice of different contracts from 4 different underlying markets that in each market There's a bunch of different contracts within those markets, then a bunch of different conditions, and then a bunch of different expiration times. So Nadex binary options, quite different than other binary options exchanges that you might be familiar with that are out there, in that Nadex gives you a variety. You can choose which market, which condition, and which expiration time suit you. And as I mentioned, these are all set up as a prediction. Now, whether you're buying or selling a knockout, your risk, your reward is known up front. They're both capped. So again, very defined risk, very defined reward. And these contracts are really designed for the retail trader. They're small contracts, and we're going to get through it. These also will trade in a range. All right. The price of a binary is going to be different than the price of a knockout. A binary will trade between 0 and 100. And yes, the 0 is the floor. It cannot go any lower than 0. And 100 is the ceiling. It can't go any higher than 100. Now, what are we talking about? What is the 0, the number between 0 and 100 represent? And with a binary option, it's a true or false prediction. Either what the event is going to happen, the condition, or whatever you want to call it, it either ends up being true or it ends up being false. Either the event happens or it doesn't. And so those conditions are, for instance, will the NASDAQ in the next 20 minutes finish higher than 11,900? All right, so there we've got a contract, the NASDAQ 100 or the US Tech 100 at Nadex. There's the market. Will it finish higher than 11,900? There's your statement. And then in the next 20 minutes, there's your time frame. There could also be hourly ones, daily ones, weekly ones. Okay, so now you're getting an idea of what those represent. Now, in the end, if the prediction is true, the contract will go to 100. It will settle at 100. Sorry, I was choking a little bit there. If the prediction is false, it will settle at 0. That is why it's a binary option. It goes to 100 if it's true, it goes to 0 if it's false, and in the end, it is binary in nature. It is either one or the other. They both can't be true. There is no middle ground. It eventually settles being worth 100, or it settles being worth 0. Now, the price that you're trading, and this is where it gets a little different, is it can be thought of as reflecting the probability of the statement being true, or as the probability of the event actually occurring as determined by the marketplace. So this is a marketplace. Anyone can buy, anyone can sell. You can put an order between the bid and the ask. You can put an offer away from the market. So we have a competitive marketplace. Unlike other binary options exchanges where you have to trade on their markets, at Nadex, you can join the bid, you could join the offer, you can put an order in between the bid-ask spread. That's not to say you're going to get filled, but you can certainly try. And you can both buy or sell them, also different than other binary options exchanges. So you can buy these or you can sell these, and what you're really trading, it's the probability. And let's use my NASDAQ example, the US Tech 100. I picked a number, 11,900. Is the NASDAQ going to be above 11,900 by the end of today? Yes or no? If the Nadex indicative index, which is the NASDAQ 100 future, if it were right there, if it were trading right near 11,500, the probability of it going higher or lower is going to be equal. And you're going to see that this contract's going to trade around 50. And that means there's a 50% chance that it will finish higher than 11,900. Also means there's a 50% chance of it not, meaning the statement would be false and it would finish below 11,900. Now, you can either buy it or sell it. If you think the statement's going to be true, you can buy it. And if it indeed becomes true, it would go from 50 to 100. So you would risk $50 to potentially get 100, in which case you'd make $50. It'd be even money. Now, if you thought it was going to be false, no, I do not think it's going to be above 11,500. You could sell it. And let's say you sold it at 50. And if you were wrong and it settles higher, well, you sold it at 50, it went to 100, you lost $50. Right? But if you sell it at 50 and it indeed settles below 11,900, it would go to zero and you would profit the $50. You sold it at 50, it went to zero. All right, so you're trading a probability of an event occurring, and those probabilities will move. And I'm going to show you how quickly they can move when we jump over to the platform. But what's factored into the price of a binary option, just like other traditional listed options, time. If there's a lot more time for something to happen, that will be factored into the price and the probability of something happening or not. And volatility will also be factored into it. If something's moving around a whole bunch and it's going up and down and up and down and up and down, yeah, that'll be factored into the probability of the event being true or not. If there's time and volatility, the marketplace will accommodate for that. But you can you can make your prediction whether it's going up or whether it's going down. And the interesting thing here with these is they are worth $100. So that when you're trading that probability, that let's say there's a 30 probability, that's actually the dollars associated with that contract. If you were to buy a contract at 30, there's a 30% chance of, at that moment in time of it going to 100, you'd be risking $30 to potentially make 70. And if you were to sell it, well, it could go from 30 to 100, so you'd be risking $70 to potentially make $30. So again, you can buy or sell these. It's a probability, and interestingly enough, because they're $100 contracts, the probability and the dollar amounts line up, so it's easy to understand. Now, this is probably, if there's any other takeaway from today, any other takeaway, this is the one thing I want you to take away. And this is true with trading anything, but it's absolutely true when trading knockouts and binary options. All right. And that is, just because there's an expiration associated with the contract does not mean that you need to wait until then to see what happens. Right, that is really important. In fact, we often find some of our more successful participants and traders don't wait for that surprise. Because something very can happen very quickly as you approach actual settlement, and I'm going to show you an example of that. So what the point is just because there's an expiration, you don't have to wait until then. You can choose, if you want, to exit the position early. So you can do that for two reasons. One, you can either lock in partial profits or you can limit your losses. You do not need to experience maximum potential profit or maximum potential loss. You can trade around these. So let's use my 30 binary option price for an example. If I were to buy something with a 30 probability and it started to go up, and in fact it went to even money, all right, now we're later in the game, later in the day, time has gone on and the price has gone up, and now it's trading around 50, all right, because it went up and it's in even money. I don't have to say I'm going to continue to risk my money. I could choose to liquidate my position. I bought it at 30, I could sell it at 50 and simply walk away with a $20 profit and make another choice. Now you could choose to stick with it, and maybe it goes to 100, or maybe it goes to zero. Your opinion might change as the day goes on, as volatility picks up, who knows? But whatever it is, both with knockouts and with binary options, you don't have to wait until the end to see what happens. You can exit a position early if you want, and that is also different than many of the other binary options exchanges that you might find out there. All right, so I've really hammered that home, and I hope you take that with you. That is the one gem, the one pearl of wisdom that I'd really like you to remember if you remember anything from this session. Now, again, I'm going to mention, please, if you got any questions, reach out to us at customer service at Nadex, and please follow us on social media, particularly our YouTube channel. And again, I want to remind you, 9 a.m. Eastern, 8 a.m. Central every day. It's like 10 or 15 minutes. We do a quick morning analysis. We quickly sum up what might have happened in the overnight markets and give you a couple of hot spots, something that you might not necessarily be looking at, and do a little bit of technical analysis on some of the contracts and what you could potentially look for throughout the day. So please, I want you to be aware of that. It's something new that we've started doing. All right, now what I'd like to do is I am going to switch over, and I'm going to do that because I don't want you to be confused. All right, let's share. I need to jump over to the Nadex platform. There we go. Excellent. All right, let me just take a quick peek here. I'm just going to take a quick peek. Okay, this is excellent. I'm loving these questions. I'm also liking that a lot of people would like a copy of the deck. This is all right. Okay, awesome. Yep, and I love it. All right, I'm looking at the questions, and I like that people are looking for a copy of the deck. I happen to also like that we're getting that you do not have to wait until expiration. That is probably the most important part of all of this. So I'm really glad that that point is resonating. That is fantastic. Okay. So here we are on Nadex. By the way, I mentioned that you can reach out to us. You could find us in different ways. We also have this chat with an expert functionality. This is another way to interact with us is you can use this chat function, but you can also email us. We try to make ourselves available. And remember, I do have Sophie in the background. There have been quite a few questions, and it looks like she's been doing a fantastic job of answering them. So, just a shout out to Sophie in the background. Thank you for that. And please continue to fire those away at her as we keep moving forward. All right, I'm going to, oh, by the way, there's something else I wanted to point out. In our learning section, we've got videos on how to use the platform. We've got blogs and learning articles. We do have resources available on our website. And even under our webinar section, this is how you find what's coming up. So if you want to register for a future webinar, by all means, I think we usually keep them out about a month-ish. I think if we put them out a little too far, people might forget, but reminders do get sent. But you can see what kind of webinars we got coming up. But we also archive everything. And in fact, this session's being recorded. It'll be posted to our archive. You'll be able to find it here to play it back, but you will also find it, and this is coming on our YouTube channel. So would encourage you again to subscribe to that. All right, I'm going to go ahead and log in. And if you've never been on our platform before, this is what you'll initially see. It's broken into 3 sections. We've got our products section on the left, our dashboard section, the working desk right in the middle, and you'll see this is where the chart and the order ticket will show up. And then we got this positions pane down below where you can see orders that you're working, any open positions, and you can even see your 24-hour history. Now I'm going to get this out of the way for the moment, just because I want to open up some screen real estate. And let's start with knockouts. All right, we're going to start with knockouts. So I'm going to go ahead and click on knockouts, and we've got knockouts on indices products, foreign exchange, and commodities. When we look at our commodities, we've got crude oil. This has been a really interesting trade all week. It seems to have been range bound, but we've always got 4 knockouts for each one of these. We've got them in gold. Nat gas today, it's been interesting. Nat gas has been in a downtrend over the last few weeks. partly because it's related to oil as well, because oil can be a little less expensive of an alternative. So it's rather interesting to watch how nat gas and oil trade. And then we've also got silver. We've got them in our foreign exchange products, and we've added knockouts for almost all, in fact, all of the major currency pairs. All right, so pick your poison there. And then in the indices, we've got them on the 4 major US indexes. Our names are a little different, although you know what these products are. At NASDAQ, the US 500, at Nadex, the US 500 is the S&P 500. The US small cap is the Russell 2000. The US Tech 100 is the NASDAQ, and the Wall Street 30 is the Dow Jones Industrial Average. Since I've been talking about the NASDAQ index and confusing NASDAQ and Nadex all day, getting a little tongue-tied, I'm going to go ahead and click on any one of these right now just to bring up the chart. I'm now going to hide these products, and this is how Nadex makes it easy for you, particularly when you're trading knockouts, is you can see the 4 knockouts that we've got on our chart, and they're listed over here on the left-hand side with the big blue, with bold blue lines on where the ceiling and the floor are. So based upon what you think is going to happen, if you think this index we're going to, right now we're in a short-term uptrend, but we're in a long-term downtrend. You'd have to make a determination. What do you think is going to happen? Now, just for fun, I'm not a buy or sell recommendation. Let's just say I thought NASDAQ we're going to continue in this uptrend. Remember, this expires in 1 day and 3 hours. And I thought it was going to continue in this uptrend for now. All right. And I've picked a knockout where the ceiling is up at 12,044 and the floor is 11,894. That is also on the order ticket. Okay. Now, if I thought this were going to go higher, I could buy one of these. I'm going to click on buy. Whoops. You know what? It switched my contract. Let's do that. All right. Sorry about that. All right. Here we are with that contract. And I clicked buy. Now, this is a Delta 1 product. Notice how the market that I'm seeing, 31.5, 32.5, and the underlying is right around 32. Okay, now it's ticking down a little bit. But this is what I was saying when it's Delta 1, is this is the indicative price of the underlying, the Nadex indicative index price. And the prices where there's a bid and an ask around it, it's going to track right in line. It's with the price of the underlying. Now, if I thought this were going to go higher and I were to try to buy one, and let's just go ahead and pick 11,930. I'm going to pick a nice even number because it's going to make it easier. If I were to buy one of these, I know that the most I could lose is $144. That is, I buy it here at 11,930. And it goes against me. All right, I'm wrong, and it trades down and it hits the floor, 11,894. If it were to touch that level, which it did earlier, it was down there earlier today. If it were to come back down here and touch it, I would get knocked out for maximum loss of 144. Now, if I were to buy it and it were to continue in this uptrend and it were to touch 12,044, which is where it was at earlier in the week, you can see it was back there earlier in the week. If it made it all the way up there and touched that level, I would get maximum profit of $456. Notice that these are 60 points wide. So the most a NASDAQ contract is worth is $600. It's always going to add up to $600. Now, that is not true of all of our knockouts. I think most of our other knockout contracts for indices are 50 points, so they're $500 contracts. For each product, it's a little different. You can check to see what the spread is and what the range is, but you could control how much you're willing to risk and how much you could potentially make. If I think this is a little too close to playing with fire, because I think it might revert down here a little bit, it might test this level, get close to it, and I don't want to get knocked out, maybe I choose something that's a little further away. Now notice here, if I were to buy one, I mean, we're in the middle of this range. I mean, we're right almost in the middle. Notice if I were to buy one here, I'd be risking $271 potentially because it's got more downside risk. And my upside would be limited because I brought the ceiling down to 12,014. So you got to choose. Do I think NASDAQ is going up? Do I think it's going down? Do I want to buy it? Do I want to sell it? And if I were to, and let's say I wanted to sell this, maybe I thought this was going to turn over and roll over and go lower. We see that we're in a longer term, short term downtrend. If I wanted to sell this, maybe this knockout, all right, where my ceiling is only 11,954, but my floor is way down here at 11,804. If I were to sell this, if it were to go up here and touch this 11,954, I would lose 93. But I've got some downside here where I could potentially make some profits. So again, you've got to choose the knockout where the risk reward profile, and that is always calculated for you on the order ticket. Before you get into a trade, I know exactly what I could potentially make or what I could potentially lose. Just for fun, I do want to show you an order go into the market. Let's say, and while I'm here, I'm going to do something else. I'm going to show you a little tool. We have technical indicators. All right, we have a variety of these technical indicators. If you wanted to use one of these, you would simply click on it. So if I wanted to put my Bollinger Bands up here, I simply click on Bollinger Bands. It populates a chart. If I don't know what a Bollinger Band is, the little information we've got in platform education that gives you a little bit of education on what this means. This is an indicator that uses moving averages, and it sets standard deviation ranges to give you an idea of where you might see some support and where you might see some resistance. And then you can always customize this by clicking on it, and you could set the parameters yourself. Okay, so one, I wanted to show you that. Let's go ahead and take off our Bollinger Bands. We've also got drawing tools. Okay, so when I say I'm seeing channels, here I'm going to go ahead and click on it. And again, you can see some education on what these all are. But let's just go ahead and take a look. I am kind of seeing a channel, a short-term channel here, where we're seeing it's doing this. Right, we're seeing a short-term upward channel, but interestingly enough, we're at the same time seeing a longer-term downtrend a little bit. Maybe I want to look at Fibonacci retracement levels. Okay, and if you don't know which Fibonacci are, you can look at it here. It's a ratio that is seen in nature. It's seen in the human body. It's also, we tend to use it. It's called the golden ratio. We tend to see it in architecture, and some people look for these patterns in the market as well. I'm going to go ahead and click on it. Since we're in a downtrend, you start in the upper left-hand corner, you go to the bottom right-hand corner. If we were in an uptrend and you wanted to look at Fibonacci the other way, you would start in the lower left and go to the upper right. But let's start. I'm going to click. It's as easy as 1, 2, 3. Here I am in the upper left-hand corner. I drag it down to where I'm seeing it in the bottom right-hand corner. And then I'm going to drag it over to the right to extend the lines. And here you see some ideas on Fibonacci retracement levels. And sometimes it becomes true just because a lot of people are looking at it. In fact, if you look at the 61.8 level, it found support here. And it found support again. And then here, it actually broke through, all right, and it came, it started to trend down towards the next level, eventually rallied back up, went through it the other way, but it kept on dancing through this level, but it always sort of paused around here. In fact, it paused around this level down below. And here's the 50% level. You see it pausing until it breaks through. And so when it breaks through a level, so when it broke through this 38.2% 8% level. All right, it then became a resistance level for it. It came down, it came back up, it became a resistance level for it again. So sometimes things like this on technical analysis can help you, where if you're looking for a longer term trend or a shorter term trend, you can choose. Now, if I thought NASDAQ were going to go lower, okay, and it's just kind of ticking lower, again, not a buy or sell recommendation. Let's say I wanted to sell one of these at 11,925. Actually, I want to use 27. I'm trying to pick one that's in between. I can place my order. All right. When I place my order, notice that it does show up down here in my order tab, and I'm trying to sell. Oh, and look at that. I was working one to sell one up at 11,927, and when it changed and traded, it didn't. It went from my orders tab to my position tab, and I'm now short one of these at 11,927. And I know because I sold that, if it goes higher, I could lose $228. If it goes lower, I can make $372. Now, do I have to wait until expiration to see what happens? No. If I wanted to make a couple of quick bucks, and let's just say I thought it might come down to this 11,900 level, tends to be a psychological level, and I wanted to buy this back down below, I could just say I want to buy it back at 11,000, let's call it 905. I'm just going to put a bid below. All right. And when I place my order, I've got an order down below to buy it back at 11,905. Now, if it goes higher, I might get knocked out. If it comes lower, I'll take my profit and move on. Now, if it touches, and if I do get knocked out, I got to be careful because I'd want to cancel this order because I wouldn't want to buy, get accidentally filled on both. But you can, and the point of this, I placed an order away from the market or between the market, and you may or may not get filled. I did, and you can place one to take it off at a profit level someplace below if you sell it, or above if you bought it. You don't have, you can do that in case you're not always looking at the computer. All right, I think that's enough with knockouts. What I'd like to do now is jump over to binary options, but on my way, I'm going to make a quick little pit stop in call spread land. Now, call spreads, by the way, very similar to knockouts. It's going to have a range. And notice we've got call spreads that are shorter term, all right, or daily. Okay, they're not out there on weekly, but let's go ahead and just take a look at a call spread. And I'm using the US Tech 100 again, and let's hide this. What I've got and let's just open this up a little bit. I've got these ranges just like before, okay? I've got a floor and a ceiling. The difference between these and knockouts are that if it touches, so this range, 11,870, 11,960, if it touches a floor or ceiling, I am not knocked out of the trade. All right. So if this were to if I were to sell this contract and it went up, that's just for fun, just look at it. If it were to go up, I wouldn't get knocked out. All right. I'd have time for it to turn back over and go lower again. Also, if it were to go down and hit this floor, I wouldn't get knocked out for a profit. It could go lower, but in theory, it could also then come right back up. Now, notice here, though, that the price I'm trading is not right around the indicative price. There is a premium that is associated with buying and selling these because you get that optionality. So you're going to give up something. You're going to have a bit of a premium baked into the contract to have the optionality of not getting knocked out when you hit the ceiling or the floor. Now, the other catch there is you could be, that's great if you're wrong. If this goes up and then comes back down, wonderful. But this could go down. You wouldn't necessarily get your profit. You wouldn't get knocked out for a profit. And if you're not paying attention and you don't buy it back, it could go right back up and you missed your chance. So Call spreads, similar to knockouts, except it has optionality. You don't get knocked out of the trade. But again, you always know what your maximum loss or maximum profit are before you get into it. All right, so this is a 40-point range on these. So these are worth $400, this call spread. Okay. So if you sold it, and even if it were to keep going higher, you know you couldn't lose any more than the 154. And if it were to go down, you couldn't make any more than 206, even if it kept going lower. I like to point out call spreads. Knockouts, they definitely take you out of the trade. It's like having an OCO, a one cancels other, around a bracket order around your position. With no slippage, you know exactly where you get knocked out for a profit or exactly where you get knocked out for a loss. Call spreads has optionality in it. All right, lastly, the binaries. And here, what I'm going to do here is, one, I just want to show you that we've got binary options on all of these indices. All right, and again, we've got choices: hours, daily, weekly. Here's the S&P 500 for the week, and you'll see that there's probabilities. In fact, let's take a look at the S&P 500 for 1 second here. We've got a strike price, 35.8250. Now, currently, the indicative price of the index is down here at 35.58. It's below. So what are we seeing in the price for the weekly? This one expires in 1 day and 2 hours. They're only giving this, and we're going to use the middle between these, about 27. They're telling you that there's about a 27% probability that at the end of the week, in 1 day and 2 hours, the S&P 500 will settle above 35.8250. Right, and if that also means there's a 73% chance that it's going to finish below. Now remember, these probabilities, it's also the dollar value. Let's say I thought this were going to rally. All right, I thought we might see a little bit of a rebound in the S&P 500, and I wanted to buy one at 27. I'm going to put it right between the market. If I bought one at 27, I'd be risking $27. It's the most I could lose. In fact, let's go ahead and place that order in. All right, and I just want to show you, there's my order. And in fact, we see my order. Remember, not a buy or sell recommendation. We're in a demo environment here. A demo is going to be different than live because I don't know who's looking at this. But if I were to buy one at 27, the blue area is where it would need to settle for me to make a profit. For it to go to 100. For it to go to 100, it would need to be in the blue area. If it's not in the blue area, this is going to go to 0. All right, I'm potentially risking 27 to make 73. Okay. Now, if I were to buy one at 27, and let's say it rallied up to 35.82 area after I bought it, if I actually bought one, this would be trading around 50. Now, do I need to wait and see how it actually settles in 1 day and 2 hours? No, I don't. If I were to buy one at 27 and this went to 50, I could sell it at 50 and make $23. So I would risk 27 to make 23 because I bought it and it went higher. The probabilities changed, and then I can liquidate, or I can hang on to it. Now, if you wanted to take a short position in something, and I'm just going to show you the other side, if somebody said, and they wanted to sell this to me at 27, and they said, oh, you know what, that guy wants to pay 27, I'm selling it to him. There's no way it's finishing above there. The person that sells it, now, it could go to 100, so they're risking $73. All right, that person, if they sold it at 27, would risk 73 to potentially make the 27. Because they sell it at 27, it stays below and it goes to 0. So that is how a binary option works. And the person that sells it would need it to settle in this red area at expiration. And again, let's say someone sold it at 27 and it did go lower and lower and lower. Maybe they buy it back for 10. All right, it goes down and lower and they can buy it back because the probability as it goes lower, the probability on this would shrink, would go down, and they could buy it back for a partial profit. They don't have to wait for all $27. Because again, who knows what's going to happen in the last couple minutes. So what I'd like to do next, let's see how my timing is on this. Oh, this is perfect. We're going to go through a 5-minute binary example because we're going to watch the life cycle of an entire binary option, and we're going to watch it in 5 minutes, and you can see how these probabilities change dramatically. Now, these are all in foreign exchange products. I'm just going to pick one. I'm going to pick the Euro US dollar. I'm going to pick a level. I'm going to hide this, and I am going to, let's zoom in and expand the chart so we can really see what's going on. Let's make this a 1-minute chart. Okay, there we go. Now, let's watch what happens. Right now, there are 4 minutes and 27 seconds left in this contract. All right. And we see that the underlying is right around 118.48. Okay. It's right around this price. And notice that this is trading, because it's a little low, this is trading just below 50%. Okay. Notice that the one up here is trading down less than 10%, and the one here is trading almost near 100%. So there's not a lot of volatility going on in here right now. So they're really, look, and as this ticks higher, look at the probability of this goes above 50%. As it ticks lower, it immediately starts dropping. The probabilities on these will move dramatically because this contract will settle in 3.5 minutes. And what'll happen is each one of these will either go to one of two choices. It'll either go to 100 because it's true, or it will go to 0 because it is false. So notice now as we've been ticking lower, the probability on this one, maybe I think it's not going to get above here. Let's just for fun put an order to sell one of these at 30. Okay. I'm just going to go ahead and place the order in, and I'm going to sell it. All right, I just sold one at 30. You can see my position here. Actually, I sold it at 30.25. Okay. Now, what's going to happen? I need this to keep going lower. Now, since I sold it at 30.25, I know the most I can make is 30.25, and I could potentially lose 69.25. Now, as I've done this, what's happened? It has actually ticked lower. There's only 2.5 minutes to go, and as it keeps going lower, this is going to head towards 0. But I don't know. Maybe it'll pop back up. So maybe I just want to take it off for a partial profit. Let's just say I'd buy it back for 18. I could place my order. All right. Oh, and it's ticking a little higher. I'm trying to buy it back for, and I bought it back for 18. All right, there it was. I sold it at 30. I bought it back for 18. I made $12, and I made it in about a minute and a half. Now, again, I was not making a buy or sell recommendation. I just wanted to show you how quickly these probabilities can move. Had it gone against me, I could have bought it back. I sold it at 30, and had this kept going higher, I could have bought it back for 50 and said, I don't want to lose all my money. I just took it off. Now, I don't know what's going to happen in the next minute and a half, but you can see as this continues to tick lower, let's just bring the chart over, this keeps ticking a little bit lower. Notice how this one up here, no one thinks it's going to get above here, above 118.51. And I don't know if you noticed earlier, but the 118.47 had actually dropped down to the 70 range. And now that it's kind of stopping in this area, it's trading up near 95. There's still a chance that this could actually go to 100 or 0. And there's still a chance that this can, if this were to drop. Now, what I wanted to show you, and let's watch because we got 54 seconds to go. When there is about 30 seconds to go, now notice this one now is almost a foregone conclusion that's going to go to 100. And look at this. This is ticking up closer and closer. When there's 30 seconds to go, you're going to watch the prices disappear. And look at this. It's a good thing that I bought mine back because look where it's trading now. It's now above here. That happened pretty quickly. Is that crazy? We didn't think there was any chance. Now, why do these prices disappear when there's about 25, seconds to go, it's because these are either going to go to 0 or 100, and nobody wants to take the risk in the last 20 seconds. And we're watching here. I don't know. There's 8 seconds to go. It's hovering above there. I mean, this is crazy how it's right here at this price. 2 seconds, 1 second. It settled. This one actually settled at 100. It actually settled at 100. It's a good thing I bought it back when I did. Notice that when the clock turned over, new contracts are listed, and you've got new probabilities that go right back in there. So what I really wanted to show you, I mean, that's binary options. I mean, that's binary options amplified. Okay, it gets, you can trade these. They don't have to be in 5 minutes, but some people really like that action, that price action. If you really want price action, you just saw it. And here we go again. This contract's got 4 minutes and 20 seconds, and you can play in this market again if you were interested. All right. Again, we've got 5-minute binary options, and I think that really helped people to see how these move around. 20-minute binary options in the indices. Okay, and then commodities, foreign exchange, and indices, you're going to see a variety of expirations. You can choose hours, daily, or weekly, and you can make a determination on where. So here's crude oil for the week. Let's just put something up on the chart. Oh, there we go. And yeah, for some reason, I am in a demo environment. It gets a little gummy sometimes. And we're clearly having a challenge in our demo environment. But you can definitely get a glimpse at how these probabilities move and what you might want to be looking at, whether you want to trade, some of these binary options in the indices, or if call spreads or knockouts are better suited for you. All right, that was a lot. Hopefully you got something out of this session. Again, I want to encourage you, subscribe to our YouTube channel, and every morning, 9 a.m. Let me take a quick peek to see. Yeah, Sophie was awesome. She covered all these questions, and I really appreciate you guys keeping her engaged. I know that some of you reached out, asked for the deck. Sophie will certainly get that over to you. In fact, I'm going to send her that deck right after this so she can get it to all of you who asked for it. With that, I want to thank you for joining us today. This recording will be available on our YouTube channel as well as our website. And hopefully you're back for more of these sessions. Please stay safe and sane out there, and want to wish everyone good luck in the markets.